Right now.
Live
Thank you
already.
everyone for joining our live DocTalk, our first series. I'm Olga, Director of Operation at WCH, and today with a great pleasure, I'm happy to introduce Order, a financial advisors for the doctors, for the healthcare executives, definitely a person that has answered many questions for our physicians, for our clients, and we want to continue talking about removing financial discomfort from our lives. We need to have stability. We need to understand the future, the data, the numbers, everything we're dealing with. Everyone knows who we are. We are a billing company that works with doctors, helping with audit, dealing with collections, cycle revenue, credentialing, contracting. And we know the world of medicine is tough. We need not only good billers, but we need also help with dealing with financings, figuring out how the future looks. Getting to be a physician or getting to be licensed as a medical professional takes time, takes dedication, takes planning. And we want to make sure that we're able to live long, be well taken care of, give our children a good future and stability, and make sure we have enough money to get all of that accomplished. So when I met Arthur, I realized that he has an expertise, he has a niche in the industry that will definitely give our clients and to our listeners the feedback to understand their financial future better, to break down the barriers, to look at the numbers, to start planning properly. Because you never know, life is not easy. People get disabled, things happen in life. We want to make sure that we are protected. So today we're going to start talking about hard questions and looking at ideas how to strengthen our financial health. And Arthur has the prescription for it. So I guess we can start with basic questions, Arthur. Hi, how are you?
Hello, Olga. Thank you for inviting me.
And we're going to go right into the basic question that a lot of doctors ask. So what is the difference between financial advisor and a taxer, or a person who is working at a private banking and is offering financial support? Can you give us an idea, the difference between working with you directly and working for somebody who's just filing income tax?
Sure. So financial advisor, it's a standardized profession. Actually, it's licensed to give financial advice, and financial advisor is somebody who get paid for advice. And to give an advice, we have to be licensed. We're supposed to have a number of different licenses, and based on the license, we can perform different functions. So with all that, why do we need a financial advisor? So to be able to make a right financial decision. And what's right financial decision? It's a financial decision that help person to achieve their goals. So that's a short answer. The longer answer would be that as we move in life, there are different cycles. And first cycle, usually we start working and it's accumulation cycle. Later, when we retire, there is a distribution cycle. And then once we pass away, it's a transfer. We transfer our wealth, whatever remains, if any, to kids if they behaved well. So idea is that there are a lot of steps, a lot of moving parts, and financial advisor, the good one, supposed to help to guide through this kind of maze. And good financial advisor would be the one with depth knowledge, obviously, and understanding of the field that will cover more than one area. Traditional financial advisor, what people think it's asset manager. When people come to bank, there is always some doctors, especially with a lot of experience, they make money, and some they're able to save those money at the bank, and then banker come and say, listen, let me help you to invest. And those people, the financial advisor, what they do asset under management. But really, financial advisor is supposed to give you a plan. It's just like health plan. It's just financial health plan that you have a goal, and plan should outline number of steps reaching the goals. And I will be able to give more details, but that's in the nutshell.
I also think that because you have the experience of working with doctors, with healthcare executives, you understand the complete background of a physician's life. So we have the practice business, we might have other investment business, we have the real estate, we have the family. and you are able pretty much to bring it all together, to put it on the map and kind of look at the numbers and see, hey, this is the plan that we're going to bring into the next 20, 30 years, right? I mean, how do you plan it out for the providers, for the doctors?
Sure. Doctor, it's a unique profession because it's a lot of training. Nobody becomes a doctor like just accidentally. It's a lot of hard work, 15, 20 years. So a lot of schooling, residency, fellowship, and so on. So the fastest moving person in medical field probably will become a doctor at 32, 33. And that is like, I don't know, it's just like flash fast.
Mm-hmm.
So what happens when person reach and become finally a doctor, most of doctors will have a lot of debt. And then it takes time to build stream of income, pay off debt, and so on. And a lot of doctors work with their hands. So let's say if a software engineer injures his hand, he probably will be able to write code or maybe dictate. But if doctors that does procedures and even in gym just dislocate his shoulder, he may not be able to operate. So there are unique risks. A lot of debt right after medical school, and physical condition doctor to be able to perform procedures very important. Mm-hmm. So then there are a lot of liabilities, and doctors will have liabilities protection if something goes wrong. So and I think that's one of the few things that's special about doctors. Then besides those protections, doctors, they cannot, everybody wants to stop working at some point. Maybe doctor will want to open his or her practice. Mm-hmm. And go independent. So all those things need to be incorporated. And I know you're looking for concrete answer, and I will gladly give them. We just need to narrow scope, because when it's very wide, mm-hmm. it's the answer is abstract. So that's how field differ. Doctors field, medical field differ from other fields. It's a lot of debt. It's reasonably later in life, people start their career, and there is a special protection for doctors that they need because of the unique work they perform.
So we know about the retirement, if we can talk about this a little bit. We know that an average age of retirement, somewhere between 65 and 68 for a physician. Many of them continue to be working as physicians and teaching, less than working actually in a practice. What do you feel is the right age to start looking at finances and start planning? And when is it too late already? Is there like a point where it's, well, you got to reach the level, you can't do it anymore? So what do you usually should start? And where is the limit where you're really not going to have a good potential to grow your retirement plan?
Well, I give answer of a gentleman from $100 bill. So Benjamin Franklin said that failure to plan is a planning to fail, or something along those lines. So planning is good. It's just like a person didn't become like a doctor all of a sudden. It was a careful planning, a lot of steps. So financial health no different. Sooner people start to plan. In fact, if parents start planning for kids, those kids are lucky kids, and they will be protected. So earlier is better, and I will explain why. You touched retirement, so people retire, even though the ones that love their profession, at some point they retire, they just want to have more time. I think one of the attributes of wealth is all their own time, so they don't have to perform things that they like. They just can do whatever they want during their free time. They have free time. So, and ability to retire, it's to have enough capital to sustain remaining life period. And right now, longevity, actually, it's one of the risks. And there are a lot of risks, and I will mention them in a second. But basically, to retire, person's supposed to have comfortable retirement, need to be financially prepared for it. And basically, what it concrete terms means, it's just to have enough capital to sustain lifestyle for undefined period of time. So right now, our mortality table pushing 90, so people can
live longer.
Live longer. That's one thing. Then 75% of people at some point use 2 out of 6 daily activities, and they need long-term care. That's a very big expense. It can run 10,000 and up, adjusted for inflation, like 20 years from now. So person doesn't know how long he will or she will live. They may need long-term care, and how to factor out those stochastic, it's like variables that that's not, you cannot determine them. It's not deterministic. It's probabilistic variable, and that's basically what we do, because we do risk pooling. We work with a lot of people. We know statistically how what to expect in the future, and our company Equitable assumes risk, and we have a number of solutions and strategies to protect people. And again, I will go on very concrete. I'll give very concrete examples. So just in the nutshell, so we let's say person retire, we have a strategy to position person in zero tax bracket. I know doctors, another unique thing I forgot to mention, and they pay a lot of tax, especially like in New York, New Jersey, where states where there is a state tax. It's besides being at the top marginal tax bracket, and federal level they will pay state taxes, and but then when they retire, we have a strategy so people pay zero tax. And I'm not, it's not a marketing speech, it's really people will pay zero tax. But you need to prepare for it. And when you ask when good time to start, it's good time to start was yesterday, but the next best time it's today. And right. I meet with a lot of people, obviously, because of what I do, and some people come at 76, and we still can do things. We can remove number of risks, and I will mention this risk of longevity we can remove. We can remove market volatility at any age. But let's say put in zero tax bracket has become very tricky and practically impossible overnight, because you have to reposition your asset in such a way that when distribution phase comes in, asset will be in zero tax bracket. And I will show something concrete. I don't know if your listeners can see screen.
Because I remember in our last meeting we talked about different plans, right, that are available. Is that what you want to get to, or?
I just want to mention that when traditionally people come to bank, and bank helps them invest money, all those money invested in most likely brokerage account. And so the way brokerage account works, this is brokerage account. So money goes into account after tax. And are you able to see my screen?
We see your screen. We see the charts, right? All the columns, correct?
Yes. And
so a lot of providers today are very familiar with 401k. I think everyone has it as part of their plan, right? But there's the other things they're not aware of how it works and what benefits to switch to another type of plan.
Well, I wouldn't advise to make any moves. It's like, you know, you have a patient that comes to a doctor and say, like, I have a headache, give me, you know, ask for painkiller. But doctors look and say, like, you have a whole array of problems. Yeah, and say, like, no, doctor, I don't need all those blood tests, just give me a painkiller. And so I wouldn't advise to do anything. I would like somebody
evaluate,
analyze, evaluate situation, and just make, because mistakes are costly. I can give like very brief overviews. And people put money in brokerage account, money goes, that goes after tax. That's what Red Cross means. They actually, every time a position adjusted, closed, will be longer term capital gains that is taxable. And on the way out, people pay tax. 401k, it's a little bit different. Money put before taxes, all gains non-taxable, but everything taxed as ordinary income. So let's say doctor put accumulate a lot of money like over work period and have 2-3 million in 401k at 73 years will be required minimal distribution at about 3.5%. So doctors will receive money out of 401k and they will be fully taxable. In addition, there will be those money will be marked as provisional income, and Social Security will trigger tax on Social Security up to 85%. So at the planning stage, if those money would be allocated not 401k, Roth IRA, or VUL account, those two accounts that exit non-taxable, and control 401k distribution, then that part will be non-taxable because it will be wiped out by standard deduction.
Okay.
Roth IRA and insurance account distribution will be non-taxable, and then capital gain is possible to make non-taxable again up to 94,000 this year, and it's indexed for inflation. Those things probably don't make much sense. If I just persuade kind of 1 point, just things will not work out on their own. Somebody who worked with those things on a daily basis, it would be good to provide analysis and advise on the best strategy to reach whatever the goal is. So first you need to define goal and then define steps to get there.
So we definitely want doctors and healthcare executives to start thinking, how much money do I need after on my retirement point, right? Like what will make me feel comfortable, right? So also a question comes in, do they need, if they're already part of some kind of plan or being associated with an advisor, can they come to you for evaluation and just to give your grading on their second opinion in a way to them about it? And maybe structuring something for them? That's also one of the things that you're able to do, right?
Correct. So the good thing, it's cost nothing. I will gladly provide second opinion and the evaluation, provide financial plans. So different advisors, just different doctors work in different way. I will provide free, obviously, consultation, provide all planning, and it's part of business. Of course, I would like every single doctor and every single doctors that listen know to come to me and stay with me. But in reality, some people will go to different advisors, and it's perfectly fine. The way I operate, I will invest time and analyze every individual situation, understand client needs, and provide the plan. And then if clients would like to implement the plan, that's obviously part of implementation will require repositioning and asset allocation and so on. At that stage, I will get paid. So doctor doesn't pay me anything. My company will pay me for services I provide to clients, because clients will come and become customers from my company. And
what is the best way to reach you, so that if someone is joining in and they are looking into changing their financial situation, just to get a second opinion, even, what is the best way to reach you to talk to you about it?
Just drop me email. It's at the bottom of screen. I see it's my first name, Artur without H, ARTUR Zaitsev, ZAYTSEV at equitable.com, or just send me a text or call me. My phone is here, and I will return call. So to answer your prior question, it's just we need to evaluate, just look at the situation, understand goals, and after that I will be able to give advice what to do, if any. But majority of people, they have more or less similar goals and similar risks. And those goals just to have comfortable retirement, worry-free, be prepared for risk of longevity, minimize their taxes on the way out of money, deal with market volatility if they have market exposure, and have long-term care protection. And those things, they need to be planned for.
I think it's amazing that it's a free second opinion. It's going to open up your eyes, your clients' eyes, to understand all the options they have available. And if they like the plan, they like the numbers they get to see at the end, they can definitely come to your company, be serviced by your company, and stay with you for a long term. We have the contact information in the bottom. We are wrapping up our Doc Talk today. We will be back again. I will be providing authors' contacts in the streamline as well. And if anyone has any questions, feel free to respond to Orta, set up a call, send an SMS. Orta, any final words to everyone who's listening us today?
Oh, you're asking me? Sure. Basically, my final word is that doctors, you worked very hard and you deserve to fully enjoy the result of your hard work. And to do it, I just invite you to, I know you're very busy, find a little bit of time and analyze the financial situation and get yourself protected and prepare for a second stage and in your life when you're retired, so you don't have to worry.
All right. Thank you, Orta. Thank you so much. And we look forward to our next talk together. Be well, take care. Thank you everyone for joining and listening. Bye-bye.
Thank you, Olga.